Monday, September 26, 2016. Monaco 64 here, home of alternative economics and contrarian views. I'm going to talk about the Dow Gold ratio. So the Dow Jones Industrial Average, the price of that index divided by the price of gold. And usually what that indicates, if the ratio is going up, i.e. if the Dow Jones Industrial Average is going up faster than the price of gold, and the ratio is going up, that means that financial assets and the credit cycle or the credit market is growing. So it's a favorable environment for financial and paper assets. I'd like to first cover this ratio in the last 200 years, because it's quite clear that prior to 1913, when the Federal Reserve was created, that ratio, it did move around. You know, there were credit booms and busts, but they're not as pronounced, and the contractions were also not as pronounced. And I've got this chart here. It's from goldcharts.rs.com. And as you can see, from 1800 to 1913, the trend was for increasing credit growth. And you can see that the credit booms and busts were not as sharp as they have been since 1913. Look at the leg A, that's the credit boom of the Roaring Twenties. Leg B, that's the Great Depression. And then after World War I, credit boom started again. You get leg C. And then in 1966, that boom topped, and you got the bust, credit bust, and the recessionary, stagflationary 1970s. And then that credit contraction bottomed around 1980. The ratio was close to 1-to-1. The Dow at the time was around 800, and gold got up above 800. And then since 1980 until the late 1999, that ratio went to around 46. That was the top of the dot-com boom, internet boom stocks. And since then, we've seen the ratio come down, and that's leg E. And it bottomed around 7 in 2011, you know, since after we had the great crisis of 2008. And since then, though, as you can see by the next chart I'm going to put up, which is a little more clear and more short term, it's the last 100 years, you can see that since the bottom around 7 in that ratio in 2011, the powers that be, the central banks and the government, they've done everything they can to try to boost financial assets and the credit cycle, because the fiat money system we're under is totally dependent on the growth of credit, and also government spending is dependent on the growth of credit. So they've been able to, up until last year, that ratio got back up. Let's see what level that is. Yeah, got up almost up to 17, you know, which is a quite big move, with gold making a bottom last year and the stock market making new highs. But since then, we've topped, as you can see. And right now, we're testing some important levels in the ratio. I'm going to bring up an even shorter term chart. It's only about a year old. And this is the Dow Gold ratio here. It's from stockcharts.com. And right now, before I started making this video, I had a look, and the Dow was at 18,120 and gold was at 1,340, and the ratio was 13.52. And I bring up this chart now, short-term chart. You can see here we've broken the 200-day moving average, in the Dow gold ratio, and we're now just below the 50-day moving average. The MACD looks like it could go lower, and the key level below, we can see the July low was around 13 in that ratio. We're now 13.52. So yeah, it's looking quite interesting. It looks like we've topped in the Dow gold ratio, and who knows where it could go. Looking at it, it looks like a megaphone or a megaphone formation, and we could even drop, in my opinion, to zero, to 1-to-1, where the Dow and gold would be at the same price. I don't know what price that will be, but that would actually mean that the credit cycle has bottomed and that credit can grow again. That's why, in my opinion, it's important that the price of gold does its job of rebalancing the credit system. It will be a positive thing, and hopefully once that happens, we're going to be put back on a system maybe where the credit booms and credit contractions are not as severe and pronounced as they have been since 1913, just before, when the Federal Reserve Act was passed on Christmas Eve. So if you enjoyed this video and my analysis, please like, share, and subscribe to my channel. And if you'd like to donate to my channel, I accept Bitcoin, dollars, any currency, and there's links below in the description telling you what to do if you'd like to do that. Thanks. Bye.